Hello and welcome back, everyone. Today our cash secured put and covered call orders were executed, so we have those transactions we need to record, so let's go to it. Okay, here we are in Ameritrade's paper trading Thinkorswim account, and today when the market opened, Marvell's stock price went down. We had placed a cash secured put and a covered call order, and only one of them executed right after market open, and I'm going to show you that. Here's just the cash statement where you can see this morning at 8:31 the cash secured put executed, and we had, let's see, we had put that order in for $1. Yeah, so we put that order in for the cash secured put for $1 at a strike price of 44, and it executed it 1 minute after market open. And when it executed for the strike price of 44, of course, but instead of $1, we actually got $1.42. So we got $42 more than we were expecting. So that's pretty cool. However, on the covered call that we had put an order in, we had put it in for 57 cents or $57 for each contract. We had two contracts, but I noticed about 45 minutes or so after the market opened that it did not execute. So I had to modify it and change it to a 26-cent limit instead, and it ended up getting filled at 27 cents. So we only got 27 cents or $27 per contract on that one. But I don't know. So what is that? I don't know. I think we kind of broke even maybe on overall trade because we got $42 more on this one. So it's 27, 60 cents, about 54 cents plus that. I don't know. It's still close to about $200 for the week. So in any case, that's the way these things go. All right. So we need to record these transactions in our web application. So let's go over and do that now. All right. So here we are at the website, myatwm.com. We have already gone over to the cost basis screen in the Marvell position. I'll go ahead and just stay here. I won't have to go back over to the dashboard to show the overalls because we're only dealing with this one for the demo account, and you can see we've overall collected 1,013 for this. So after I get done entering these transactions, we'll see the additional premium that we've gained. So we can see we've lost. We have an unrealized loss of 580 so far. All right, so we have two positions to enter. So let's go ahead and put those both on the board. One is we're sold to open on both of them. One's a call, one's a put. We did two contracts on the covered call. It expires this Friday, which is the 24th. And we did one contract on the put, and it expires also the 24th. The strike price on the covered calls were $45.50, and the price we got for those was 27 cents per share, $54. The strike price on the put was 44. So as you can see, the stock really tanked about $1, close to $2 today. So it's already in the money right there. But again, we have till this Friday to see how that plays out. And we got what for that? $1.42. So I mean, it's kind of funny if you think about it. So we put the strike price for 44. We only bought one contract, but we got $1.42 for it. So break even on this is 44 minus 142. I mean, that's the break even price. So that'd be 43. It'd be 42.58 or something like that. So it's kind of funny. 42.58 is the break even point, and it's at 42.60. So it's kind of like when you include the premium, have we really lost anything? It pretty much is close to break even anyway. And like I said, if you include the cost of premium, we're well below the 42. Anyway, the position will fluctuate up and down over time anyway, but it's just nice to kind of see that in action. All right, so let's go ahead and click save on the covered call, and as soon as I click save, it's going to move down to this call group, and the same for the put. It's going to move down to the put group. So let's go ahead and click save here, and then save there as well. And so that put the position on the board, but it put the proposed records on here. We need to record it to the transaction history. And again, instead of typing it, we could type it manually ourselves, or I've created these helper rows to where you can click this button and it'll automatically move the text down for you. since this is the demo account, we're not dealing with fees or commissions. However, back on the Ameritrade, you can see the fees and the commissions there and enter them as needed if you wanted to. All right. First off, let's go ahead and move the covered call transactions down and click Save, and then move the cash secured put down and click Save. So now those transactions are recorded, and we can see the overall credits received is 1209, and if the cash secured put that we executed actually we get assigned this Friday, then our dollar cost average will be down to $45 even. And also, if you include all the premiums, our cost basis is now setting at $39.46. So we're continuing to push our cost basis down even further, and over time, given enough time, this will actually reach zero and start going negative, and then you're essentially owning the stock for free past that point, which is the ultimate goal, to be in these stocks basically for free, and then everything you collect after that for option premium is just gravy past that point. And one thing I did want to mention, and that is, in this continuous wheel strategy, especially with the demo account in Ameritrade's Thinkorswim platform, we do have plenty of capital to be working with, and I know capital may be a challenge to continually play the cash secured put side on this. Something you can do to prolong that a little longer is you can just continue to roll this. Like, so Thursday before expiration, especially if it's gotten deep in the money, you can just continually roll this put, which will basically allow you to keep a hold of your collateral, your cash that you're using for collateral, but it'll allow you to continue using that same collateral to collect premium over and over and over again. So basically, for instance, the strike price on our cash secured put is 44. So since the last trade price was 42, this thing is already in the money. So if Friday comes and goes and it stays at this price, we will get assigned on this. However, if for some reason we're cash strapped, or our cash or collateral available for our account is gone, we don't have another $4,400 to do this again. If you've reached that point, what you can do is the Thursday before expiration, I would suggest doing a Thursday, because Friday, the closer you get to expiration, the chance of being early assigned gets higher. So Thursday might be a good time to do this, and even then, it might not be soon enough. You still might get early assigned. You might actually have to start pushing it out a few weeks, and so like when you have a week or so left, push it out or roll it to the next one. And what that will allow you to do is use that same collateral to collect more and more premium longer. Now, I will say you're not going to get $142 each time you do it. You'll get less and less and less unless the price starts coming back up. But that is a way to prolong your collateral usage longer past the point, if you've reached a point where you don't have another $4,400 to do a new cash secured put position or not. So anyway, I just wanted to throw that out there, and maybe I'll demo that at some point in the future. But all right, so we've collected $1,209 in premium. We've been trading this one stock since the beginning of this year, so January. So almost a month, a little over a month and a half, and we've collected $1,209 so far. So, and anyway, that's doing pretty good. I want to thank you for watching. Like and subscribe if you haven't already. And go out today to myatmm.com and get your free account. Thanks, and I'll talk to you in the next one.